This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Down to the wire, the House moves to keep the government up and running, but the battle isn't over just yet.
Wild swings. The rush into Bitcoin accelerates. But how exactly does it work? What are the risks? And why is everybody talking about it?
Retail fraud, a dark world of crime, and drugs is being fueled by an unlikely source: gift cards. Those stories and more tonight on Nightly Business Report for Thursday, December 7th.
Good evening, everyone, and welcome. We begin tonight in Washington, where the House voted to avert a partial government shutdown for now. Up against a deadline of midnight tomorrow, the measure pushes the next threat of a shutdown to the Friday before Christmas, just 2 weeks away. It also buys time for talks on a number of thorny issues. John Harwood is following the story for us tonight from Washington. And John, it's not over yet, but at least there's a step towards resolution.
Yes, they're not going to have a shutdown this week. There's still issues that they've got to resolve by December the 22nd. Most importantly, on the Republican side, they want a big increase in defense spending, which requires Democratic votes to get past the caps that exist in law from the Obama administration already. In return, Democrats are demanding an increase in domestic spending to match that defense spending increase. And they've got some other demands as well. And since Republicans control the government, the Democrats think they've got the leverage here.
How much are non-budgetary issues at play in this debate? Namely, the dispute, the debate, the discussion over the Dreamers under the DACA rules.
Well, they're part of it. Democrats are insisting that the president follow through on the commitment that he made some weeks ago to Nancy Pelosi and Chuck Schumer, the Democratic leaders, that he would support legal status for the Dreamers. Now, he's since tried to kick that into next year. Republicans are saying we can decide this later. But because Democrats are likely to succeed in blaming Republicans for a shutdown if they don't get what they want, they're holding out and saying, in addition to the spending concessions on defense, you need to give us this legal status, and that's divisive internally for the Republican Party.
We mentioned the fact that the House has made progress, but there's still the Senate to go. What are you hearing about that?
I think that's not going to be a problem. In this particular case, the drama was whether or not they could round up the votes in the House to pass this on a short-term basis. But then both chambers are going to factor in a very big way when we get to December 22nd, with the added pressure of Christmas right around the corner, adding to the drama there.
There's always drama in Washington, it seems, these days, John. Thank you so much. John Harwood in Washington.
Well, just when you thought the frenzy over Bitcoin couldn't get any crazier, it did. And today it was a whirlwind. Early this morning, Coinbase, a cryptocurrency exchange, put Bitcoin's value above $15,000. It didn't take long to break 16,000, then 17. Soon after that, 18,000, until it pierced 19,000. But as quickly as it went up, it dropped, losing 20% of its value, just like that. And it all happened by noon Eastern. Keep in mind that Coinbase isn't the only Bitcoin exchange, but it is a popular one, and it tends to trade at a premium price.
So there is clearly a lot of volatility in Bitcoin. There's also a lot of interest. According to data cited in the New York Times, the number of people with Coinbase accounts has gone from 5.5 million in January to more than 13 million at the end of November. In late November, Coinbase collected 100,000 new customers a day. That's more users than Charles Schwab and E-Trade, although Schwab and E-Trade do have more assets under management. Now, Bitcoin is not an easy thing to wrap your head around because it's not really a currency, it's not really a commodity, and it is not a stock. And it's all based on a new technology. So we asked Dominic Chu to answer the question, what is Bitcoin?
The extreme volatility in Bitcoin and other digital currencies is raising more than just a few eyebrows. It's also leading a host of experts to recommend caution before getting involved. So, what is Bitcoin? It's a digital currency that is part of a payment system and record-keeping system known as blockchain. That blockchain is a public record of transactions that occur on its system. Transactions are verified by multiple independent parties, and Bitcoins are awarded as payment for engaging in the complex computer-driven calculations needed to maintain and verify all those records. That's a process known as mining. Which leads to the next question: how do you get and transfer them? The original way is just to mine them, as we mentioned. But trading platforms have emerged in recent years that allow people to buy and sell them, much like other assets like stocks or bonds. Digital wallets compatible with specific digital currencies also allow near seamless transfers between one party to another. And what are the risks? There are a lot of them to consider, not the least of which is the extreme price volatility. There are also genuine concerns about how the value of each Bitcoin or other digital currency is derived. Many argue the only value a Bitcoin has is what someone else is willing to pay for it, not like a company's stock that has corporate profits, say, backing it up. There's also a concern, of course, about how much more regulators will get involved in the future, and that's just the tip of the iceberg. For Nightly Business Report, I'm Dominic Chu.
Let's turn now to Matthew Green to learn more about Bitcoin and the craze and what you need to know. He's a computer science and cryptocurrency expert, professor at Johns Hopkins Information Security Institute. Welcome, Matthew. Good to have you with us. Where do I buy Bitcoin? Who am I buying it from? And how do I know that the place I'm buying it is legit?
Well, there are a few websites where you can buy Bitcoin. Some of them are a little sketchy, and some of them are regulated. One of the ones you mentioned earlier is Coinbase. They're a regulated exchange. There's another one called Gemini. And then there are a lot of places that are a little bit less genuine that you might not want to trust with your money.
Do you own any Bitcoin?
I have owned Bitcoin in the past. Unfortunately, I owned it when it was worth a lot less, and I didn't hold on to it, and I feel bad about that.
Is it a fraud?
No, Bitcoin's not a fraud. Bitcoin's a real technology. It's a real currency. And, you know, the question now is, are we in the middle of a bubble, or are we seeing an actual explosion of value in this currency? And that's a question I just don't know the answer to, but these numbers are very high.
Mm-hmm. You know, the other issue that we've heard is that it's what do you use it for? You know, if you're just trying to gain on the movement of the cryptocurrency, we saw today that many people did make money. But if you want to use it for anything else, is it a practical solution?
So Bitcoin has two problems. The first is that not very many businesses accept it. A few restaurants have, and a couple of online businesses have, but most people don't use it that way. And the second problem is that the value changes so quickly that if you own Bitcoin in the morning and you try to spend it, you might be losing thousands of dollars by holding it just for those hours and spending it. So it makes it difficult to use as a real currency.
Or you may spend it in the morning when it's worth $10,000 and turn it over to somebody else that morning and it goes up to $17,000. So you feel pretty stupid. You just paid $17,000 for something that you really wanted to pay $10,000 for, right?
Exactly. This is a big problem for people.
So what do you think is going to happen? Because coming up over the weekend, the futures exchanges, one of them in Chicago, is going to launch a futures contract on it, which may change the whole dynamic of this cryptocurrency. How do you see this playing out?
So I think that's the big question everybody is hoping to answer. One of the things that is happening now is there are a lot more people coming into this cryptocurrency area, bringing a lot of money with them. And so these price explosions are kind of explainable when you see all that money coming into this kind of small world. The other thing that happens, though, with futures is that they allow people to bet against Bitcoin. And that's kind of hard to do right now. You can short Bitcoin. And so it's possible that what we'll actually see is that Bitcoin prices start to go down and become under control. We just don't know what's going to happen.
Matthew, I have a feeling we're going to be seeing a lot of you. Matthew Green with Johns Hopkins Information Security Institute.
Meantime, on Wall Street, stocks closed higher. Tech stocks gained some ground after a recent pullback, and investors looked ahead to tomorrow's employment report. The Dow Jones Industrial Average added 70 points to 24,211. The Nasdaq was up 36, and the S&P 500 gained 7.
Feeling wealthy? Well, according to figures from the Federal Reserve, household wealth in this country hit a record $96 trillion in the third quarter, driven by a rising stock market and increasing home values. That, in theory, increases the purchasing power of Americans who own both stock and real estate and could increase spending. That is the biggest part of the U.S. economy.
In Washington, as the tax bill makes its way through Congress, investors are trying to figure out what a change to the deductibility of state and local taxes might mean for them and the economy. Steve Leisman did some digging.
It's high anxiety in high-tax states over the possible economic fallout from losing the ability to deduct state and local taxes, or SALT deductions in short. Ending the deduction is the biggest revenue raiser in the tax bill, expected to bring in from $800 billion to $1 trillion over a decade to offset tax cuts elsewhere in the economy. And there's a debate about how severely states will react to the change.
I think this would come at the expense of K through 12 education, at the expense of college, at the expense of training programs, preschool, all the types of things that the tax base in these states is currently serving. And I think it's, penny wise and pound foolish and would hurt the economy over the long run.
But supporters of the tax bill say such concerns are overblown.
Eliminating deductibility would actually change the mix of how they raise their revenue, but it doesn't affect the overall level of services. So concerns over schooling going away, training programs going away, seem overblown in light of that research.
One reason no one really knows is the bill was put together so fast with no hearings or testimony that the issue wasn't studied.
They're just moving around pieces, moving around chairs on the deck of the Titanic just to make sure that everything fits the way it's supposed to. If you ask any of them, what are the economic consequences of any individual provision, I'm sure they have no clue.
What's known is that it will hit those states with high taxes the hardest, including California, New York, New Jersey, and Illinois. The Tax Policy Center says by itself, it will hike individual taxes in those states by $2,500 or upwards for each taxpayer. But some caveats. It doesn't include other offsets like the effects of lower tax brackets or a higher standard deduction in the bill. Versions in both the House and the Senate allow for a $10,000 property deduction, and there's talk now of allowing income taxes to be included. Motivating the change? Not economics, but politics. Republican lawmakers from high-tax states are behind raising the limit because they're worried about the political fallout. They're better, it seems, at counting votes than they are at GDP. For Nightly Business Report, I'm Steve Leisman.
Coming up, out of control, the Southern California wildfires intensify. People fleeing, insurers tallying the cost of a year full of natural disaster. The Southern California fires are burning and spreading fast, and no one, of course, knows when they will stop. Businesses and residents are fleeing as firefighters move in. Aditi Roy is in Ventura, 60 miles northwest of L.A.
The red-hot flames race through the wildland in Southern California and, fueled by fierce winds of up to 80 miles per hour, made their way to the crowded suburbs of Los Angeles and Ventura counties, forcing tens of thousands to flee their homes. Places like this Ventura neighborhood, where Mother Nature spared some homes and destroyed others.
When we came out, it was just devastating.
Patricia Hampton had 20 minutes to leave her home. She and her boyfriend only had the clothes on their back when they jumped on their bikes and fled.
It was absolutely surreal. There were fire trucks everywhere. The ash was so thick and the fires were huge, breaking over the mountain and people running everywhere. It was scary.
She says they lost their home, one of 150 structures officials say were destroyed. In Los Angeles, big stretches of major freeways were shut down. Watch this video taken from inside a car on the 101 freeway, capturing devastating images of the biggest wildfire. Los Angeles public schools were closed and classes at UCLA were canceled. This Red Cross shelter in Ventura took in 150 horses and 200 dogs and cats, as more than 2,500 firefighters from 9 states wrestled with the flames, the winds, and their fatigue amid the longest and busiest fire season in the state.
I've been going from fire to fire to fire almost, it seems like, for like the last 6 months. We've been really busy. It's unprecedented for us as firemen, how busy we are.
And with the National Weather Service issuing more warnings about the winds through Saturday, More could be coming. For Hampton, it's just too much.
I could have never imagined this happening, and it's still going. I just don't know.
Firefighters are watching those high wind gusts carefully as well. Many of them are telling us it's virtually impossible to fight the flames when the winds are that high. Meantime, California Governor Jerry Brown has issued a state of emergency for Ventura and Los Angeles counties. For Nightly Business Report, I'm Aditi Roy, Ventura, California.
And in addition to those wildfires, we've seen an unprecedented number of hurricanes this year, wreaking havoc on a number of states. So which insurers are expected to feel the impact the most from these devastating disasters? Here to talk about that is Kathy Seifert, Senior Equity Analyst with CFRA Research. Kathy, welcome.
Thanks. It's nice to be with you.
Obviously, a terrible situation for those that are affected. Many of them are insured. However, the companies also will bear the brunt of many of these disasters as well. What companies are you watching the closest that perhaps have the most exposure to both the hurricane damage and the wildfire damage?
When you look at both events, I mean, the companies are going to be all the top insurers. We're going to see Berkshire Hathaway, we're going to see AIG, Travelers, Chubb. But I think from an investment standpoint, it's important to sort of compare and contrast the Florida market to the California market, a hurricane versus a fire. As much as these fires are awful and they're devastating, at least homeowners can rest assured if they have insurance, they will be covered. I mean, we all see the fallout from hurricanes when there's a question of, do you have flood insurance? Mm-hmm. What's covered? What's not covered? So while the hurricane created a lot more damage, the question of what was covered is more of an issue there than in California with the fires. I mean, having said all that, this is still going to be a really tough year for the insurance industry. I mean, the industry as a whole will produce an underwriting loss. A number of these companies are still going to make a profit because they have other resources, namely investment income, that they can use to offset these losses. But I mean, this is what the industry does. I mean, they have $700 billion in capital.
If I'm remembering,
they will.
Forgive me. If I'm remembering correctly, Kathy, often what happens in these cases is in the subsequent year, the insurers raise premiums and then profits kick in and they do very well.
Right. I mean, that's, sort of the part of the underwriting cycle. And during the third quarter earnings season, a number of the companies were very low key in terms of their expectations for pricing. I think there's some concern that investors become a little too enthusiastic and we don't have the results to justify it. I mean, we saw that late last year in a lot of the financial sectors that traded up in anticipation of regulatory reform and things like that haven't come to fruition. I think the insurance industry is sort of downplaying the impact of that. But theoretically, that is definitely what happens.
Kathy, thank you so much. Kathy Seifert with CFRA Research.
Well, Sage Therapeutics sees promising results for its depression drug, and that is where we begin tonight's market focus. The biotech said its medication to treat people with major depressive disorders quickly helped to improve symptoms of the psychiatric disease during a study. Sage said it plans to meet with the FDA to discuss next steps for developing the treatment. Shares of Sage, look at this, rocketing higher by 70%. Seems like a Bitcoin to 156.27. And General Electric is cutting 12,000 jobs in its power division as the struggling conglomerate contends with falling demand for coal and gas turbines. GE expects the headwinds in the power market to continue, but said this move will save the company $1 billion and put it in a stronger financial position. Shares up a nickel at $17.71. Meantime, one of Sears' investors is urging the struggling retailer to consider going private. The Swiss-based investment manager Memento called for an investigation into a spike in short selling of Sears stock. The company owns about 2 million shares of Sears, says it believes in the long-term value of the brand. Investors encouraged by the news sent shares of Sears up nearly 7% to $4.42.
After the bell, American Outdoor Brands said challenging market conditions caused sales to slip, but the results were still ahead of estimates. Earnings also topped analysts' expectations. Shares of the gun maker fell sharply following the report, wiping out a 5% gain in the regular session, where they closed at $14.93. There were some stock buyback announcements after the bell. Health insurer Anthem said it was raising its share buyback program by $5 billion, and United Continental is launching a new $3 billion program, with that airline saying the move represents its confidence in business. Anthem shares were flat in the extended trading session after closing up nearly $1 to $223.64. United initially rose, adding a 2% gain during the regular session, where they closed at $63.53. And the Justice Department's lawsuit to block the proposed $85 billion merger between AT&T and Time Warner will go to trial on March 19th. The judge presiding over that lawsuit said he will try and reach a decision by late April or May. The company's merger agreement expires April 22nd. AT&T was up 6 cents to 36.17. Time Warner off a penny to 90.37. Coming up, gift cards. They're simple, they're easy, but they're also being used to fund drug addictions.
It is that time of year when many of us decide the best gift to give is a gift card, simply because they are readily available for virtually every major retailer across the country. But these cards are also the target of some very serious fraudulent schemes. Contessa Brewer investigates.
Inside some of the country's biggest retailers, there's a shadowy world of commerce, crime, and drugs. And at the center, gift cards.
Are gift cards currency you can use to pay for drugs?
Yes. Yes, most definitely.
Just saying.
Amen to that.
By all appearances, these four women could be tidying up what looks like a college dorm room. But this is no university. It's rehab.
That worthlessness, that guilt and shame that I feel every day that I chose drugs over my son. Every day.
And these women aren't students. They're patients struggling with crippling addiction.
I've definitely stolen.
They sat down with us at a drug treatment facility in Jacksonville, Florida. 23-year-old Kristen Booth's drugs of choice, oxycodone and heroin. She's been arrested twice for gift card fraud.
I would go and take things off the shelf. I would make sure I left the store, so on camera it looked like I purchased the items, and then come back, go to customer service.
And some of the biggest national retailers are some of the biggest targets because of relaxed return policies.
I would go to Home Depot, Lowe's, Walmart, stuff like that, to take stuff, leave, go to another Home Depot, take it back, and get a gift card.
Sometimes drug dealers directly accept the cards as payment.
Say if there's 50 on the gift card, your dealer will only want to do like 25. And 9 times out of 10, they're not going to give you cash, they're just going to give you product.
Mm-hmm. But more often, the cards get sold to third parties. Corner stores, pawn shops, and specialty retailers make it easy to get cash. The National Retail Federation found 57% of companies reported fraudulent gift cards or store credit in at least one location. That's down from 2/3 in previous years.
It's been our experience that they're going to commit these crimes when they're desperate and they're needing their next fix.
We ride along with Lieutenant David Ballard, who's on a Shelby County Sheriff's task force devoted to retail theft in the Memphis area. The CDC ranks Tennessee the 3rd highest in per capita opiate prescriptions. Shoplifting, return fraud, and gift card abuse have skyrocketed in the state. And nationally, every law enforcement agency we reached out to and every drug addict we talk to confirms the connection between opioids and gift cards. Deputies arrive at JCPenney to arrest an employee for embezzlement involving gift cards. Suddenly, they spot a theft in progress at the store and give chase through the mall parking lot. The suspect's cornered and arrested for shoplifting. Investigators find a slew of gift cards on her front seat.
Would you mind just explaining to me about the gift cards?
Neither suspect wanted to talk, and investigators have not linked their alleged crimes to drugs. In one Tennessee county alone, in 1 month, police linked 16 of 19 overdoses to the sale of gift cards. In the city of Knoxville, over 3 months, it was 83 of 98 overdoses with ties to gift cards. There's no national database tracking the sale and purchase of gift cards, but a few states are aggressively trying to change that because of the opioid crisis. Online exchanges Raise and Cardpool say they vet sellers thoroughly and use anti-fraud technology. National retail chains are also grappling with the problem of return fraud and gift card abuse. And Home Depot has recently cracked down with a change in return policy. The company tells us it only accepts store credits for its in-store purchases, and we require proof of ID when store credits are redeemed at checkout because of the increase in return fraud. In the end, making it more difficult for addicts to turn cards into cash may be only a temporary obstacle to the next fix.
When you're suffering from addiction, any length means any length, and you don't care how many charges you have, you don't care what you've been through, you just care about the next one, and one is never enough and 1,000 is too many.
No matter the cost. For Nightly Business Report, I'm Contessa Brewer.
Do you want to put these in there?
The National Retail Federation says return fraud continues to be a serious threat, with estimated annual losses at $9 billion to $15 billion. To read more about gift card crime, head to our website, nbr.com.
An update to our top story. The Senate has enough votes now to pass a stopgap spending bill to avert a government shutdown. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we will see you tomorrow.